At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hoksoon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hoksoon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hoksoon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hoksoon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met. From permits to paychecks. Ensuring legal, fair, and quota-compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, Electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDI.
Half of the KSC processing and launch.
At Ines Group Berhad, we have built a strong foundation as a Malaysia
Good afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front. Bursa Malaysia is holding on to solid ground as global markets face a fresh geopolitical shockwave. The benchmark FVM KLCI edged tightly toward the 1,700 psychological resistance mark this morning. This upward push follows a massive overnight surge in international crude oil prices, triggered by a sudden announcement from Washington stating that the United States will officially reinstate its maritime blockade of the strategic Strait of Hormuz. In a highly unexpected social media declaration, US President Donald Trump announced that the American military will blockade the critical shipping channel and enforce a mandatory 20% toll on all commercial cargo passing through in exchange for maritime security. The immediate fallout was violent across energy trading boards. Brent crude futures for September delivery leaped a massive 9.5% overnight to hit $83.30 a barrel. As we speak, the global benchmark has escalated even further, trading at nearly $85 a barrel. This commodity spike triggered an immediate chain reaction on the local front, driving investors to aggressively pile capital into energy plays on Bursa Malaysia. State-backed heavyweight Petronas Chemicals and Petronas Dagangan led the defensive charge, single-handedly offsetting broad-based declines across other index blue chips. Consequently, the FVM KLCI ticked up 1.25 points to trade at 1,699.69, with market participants holding back from massive sell-off in anticipation of further geopolitical fallout. In its latest technical overview, Apex Securities highlighted that the benchmark index has successfully extended its short-term rebound after breaking past its key overhead resistance of 1,695. The charting firm noted that while the index continues to comfortably ride above its 9-day, 20-day and 120-day moving averages, the broader bearish double top pattern remains technically valid until the market decisively shatters the 1,700 to 1,720 resistance zone. Apex maintains that the overarching macro uptrend remains fully intact as long as the index defends its baseline support at 1,674. However, a sudden break below that floor would expose the market to a deep retest of the 1,660 level. Looking at active market counters, Petronas Dagangan served as a primary anchor, rising 22 cents to finish at 90 ringgit and 44 cents. Petronas Chemicals climbed 21 cents to sit at 4 ringgit and 56 cents, while plantation giant Kuala Lumpur Kepong advanced 10 cents to reach 21 ringgit and 98 cents. On the volume side, the most active equity plays on the floor were Tanco, which gained 2 cents to hit 26 cents, Velesto dipping 1.5 cents to trade at 27 cents, and Vinvest, which shed 1 cent to sit at 2 cents. Moving on to our local currency and foreign exchange, the Malaysian ringgit opened fractionally stronger against the US dollar this Tuesday morning, managing to find firm baseline support as escalating military and political uncertainties surrounding the Strait of Hormuz continue to drive global energy prices sharply higher. At the 8 a.m. opening bell, the local currency edged up slightly to trade at 4.0675 to 4.0730 against the greenback, staging a minor gain from Monday's close of 4.0680 to 4.0730. Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid highlighted that the ongoing friction inside the Strait of Hormuz remains the absolute focal point for international trading desks. The volatile supply chain has sent West Texas Intermediate and Brent crude futures flying, surging by 9.42% and 9.35% to sit at $78.14 per barrel and $83.12 per barrel respectively. Concurrently, the 2-year and 10-year US Treasury yields shot up by 8 and 6 basis points to hit 4.28% and 4.62% as global inflation expectations trend higher, reinforcing bets that the US Federal Reserve might unleash further policy rate hikes later this year. This hawkish macro premise pushed the US dollar index or DXY up to 101.276 points. Dr. Afzal Nizam warned that against this aggressive backdrop, emerging market currencies will likely experience heightened short-term volatility, projecting the ringgit to fluctuate between 4.07 and 4.10 against the greenback throughout today's session. Despite the heavy global cross-currents, the ringgit advanced confidently against a broad basket of major international currencies at the open. The local note appreciated against the Japanese yen to trade at 2.5404 to 2.5075 from yesterday's close of 2.5110 to 2.5142, strengthened against the British pound to 5.4297 to 5.4370, and against ground vis-a-vis the euro to sit at 4.6296 to 4.6359. Regional cross rates inside Asian finished on a mixed note, with the ringgit firm up against the Singapore dollar to 3.1417 to 3.1464 and gaining against the Thai baht to trade at 12.1396 to 12.1618, while remaining completely flat and unchanged against both the Indonesian rupiah and the Philippine peso. Now for some economic news. The structural outlook for the global edible oils market remains highly resilient. Leading research houses are maintaining an optimistic overweight stance on the Malaysian plantation sector, forecasting long-term supply and demand dynamics to stay perfectly intact. Despite recent regulatory data showing a short-term increase in physical stockpiles, analysts are confidently pinning a full-year crude palm oil or CPO average selling price assumptions between 4,300 ringgit and 4,500 ringgit per ton for 2026. This price stability is heavily supported by intensifying regional El Nino weather patterns, Indonesia's aggressive push toward a B50 biodiesel mandate, and palm oil's highly attractive trading discount compared to rival soybean oil. The upbeat structural view comes immediately after the Malaysian Palm Oil Board, or MPOB, released its June performance metrics. The report noted that a combination of rising crop output and imports pushed national palm oil inventories up to 2.54 million tons, lifting the annualized stock-to-use ratio to 12.4%. While the arrival of the peak cropping season typically caps immediate upside and triggers near-term price consolidation, investment banks expect the inventory build to be heavily mitigated by robust restocking activities from major international importers alongside Indonesia's domestic biofuel consumption mandates. In equity research, Hong Leong Investment Bank research highlighted that elevated CPO pricing will be firmly sustained through the second half of 2026. The house strongly favors plantation giants with pure upstream programs, operations, and deep exposure to Malaysian acreage, given their superior in earnings leverage to raw asset inflation. Their top buy recommendations include SD Guthrie with an active target price of 7 ringgit and 5 cent, alongside Hapsang Plantations of a target price of 2 ringgit and 89 cent per share. Separately, TA Research projects CPO values to remain comfortably range-bound, tracking a seasonal slowdown toward the fourth quarter while issuing buy ratings on United Malacca at 7 ringgit and 3 cent and Kim Lung Resources at 2 ringgit and 82 cent. Concluding the sector analysis, banking economists note that while benchmark Brent crude has eased down to $76 per barrel from its previous high, persistent structural tensions surrounding the Strait of Hormuz could rapidly inject a severe energy risk premium right back into international markets. If energy costs snap higher, the underlying economics for local B15 and regional B50 biodiesel blending will improve dramatically, allowing domestic mandates to rapidly absorb any excess vegetable oil supply. However, planters will still need to manage lingering input cost pressures extending into 2H26, driven by elevated global urea pricing and higher diesel-linked freight and shipping insurance logistics. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. National Postal and Logistics provider Pos Malaysia Berhad has officially made its grand entry into the expanding micro-investing retail wealth space. In a regulatory announcement, the group revealed the official rollout of Pos Aratnu Gold I, a fully Sharia-compliant digital gold savings platform designed to let ordinary Malaysians buy, accumulate and trade precious metals starting from a microscopic entry point of just 10 ringgit. Developed in a joint commercial partnerships with precious metal specialist Gold Capital Growth SDN BHT, the digital network allows users to buy and sell physical assets online based on real-time global market pricing. Crucially, the system features a low buyback threshold of 0.5 grams, giving savers the ultimate flexible freedom to liquidate their digital holdings into physical cash or seamlessly redeem them for minted 999.9 fine physical point bars delivered across the country. Pos Malaysia Group Chief Executive Officer Charles Brewer emphasized that gold has traditionally served as a fundamental baseline for long-term household security and wealth preservation in the local market. He noted that by lowering the barrier to entry to just 10 ringgit, the group is empowering everyday citizens to kickstart practical savings habits using a trusted, highly familiar institutional retail network they have interacted with for years. To guarantee absolute security, all digital gold holdings are fully insured, stored in 24-hour high-security vaults and backed by stringent verification from the London Bullion Market Association, Sirim Berhad and the National Metrology Institute of Malaysia. Gold Capital Growth CEO Fong Pok Yi highlighted that this digital launch explicitly targets young professionals, families and underbanked B40 households who were historically locked out of the traditional gold accounts due to steep initial capital hurdles. Looking at operational milestones, Pos Aratnu head Muhammad Zubair stated that the company is confidently targeting between 50,000 and 70,000 customers within its first year of commercial operations. Everyday users can access the ecosystem today via participating physical outlets or instantly complete an online electronic Know Your Customer verification directly on the group's digital portal to begin building their personal portfolios. Up next, we have a market update. Asia Pacific equity markets opened highly choppy this Tuesday, swinging wildly between gains and losses as international investors struggle to price in a compounding double threat, an escalating energy shock in the Middle East and hawkish pivot from the US Federal Reserve. Trading floors were immediately spooked after US President Donald Trump announced a reinstated blockade of Iranian shipping alongside a mandatory 20% toll on all commercial cargo traversing the critical Strait of Hormuz. The immediate fallout sent global energy benchmarks soaring, with Brent crude futures climbing 2.6% to hit a one-month high on $85.50 a barrel. This massive commodity spike follows a brutal overnight session on Wall Street, where crude oil surged over 9% and the Nasdaq Composite plunged 1.6%. Market anxiety was compounded by hawkish comments from Federal Reserve Governor Christopher Waller, who warned that the US Central Bank may be forced to raise interest rates in the near term if upcoming inflation metrics remain well above their 2% target. Market participants are actively positioning for a highly volatile sessions ahead of the US Consumer Price Index released later today. The CME Group's FedWatch tool shows that the implied probability of a 25 basis point interest rate hike at the Fed's upcoming July meeting has suddenly spiked to 43.3%, up sharply from 34.2% on Friday. Meanwhile, the benchmark US 10-year Treasury yield advanced to 4.6297%, holding the US dollar index near its highest levels of the month. In alternative assets, spot gold ticked down marginally to trade at $3,997 and 27 cents an ounce, while Bitcoin managed a fractional gain to hold above $62,318. Finally, wrapping up, we have major corporate developments and deals across Malaysia. Sundabi Property BHT has lost its court bid to retain an additional 78.6 million ringgit in compensation arising from the government's acquisition of its land for the West Coast Expressway project. Milux Corporation BHT has proposed to acquire the entire equity interest in Movon STN BHT for 150 million ringgit to be satisfied entirely through the issuance of 220.6 million new MCB shares at an issue price of 68 cents per share. Maxland BHT has proposed a rights issue of up to 2.4 billion new shares to raise up to 60.1 million ringgit to fund its timber operations, tree plantation activities, and working capital requirements. Kim Tak Chong Consolidated BHT plans to invest 30 million ringgit in a gardenia bread manufacturing plant in Kota Samarahan, Sarawak, which is expected to create 500 jobs for local graduates and skilled workers. Velesto Energy BHT's wholly owned subsidiary, Velesto Drilling 3L Ltd, has terminated the sale of the jack-up rig Velesto Naga 3 to PT Indonesia Drilling Energy after the transaction failed to complete by the agreed deadline. Aneka Jaringan Holdings BHT has proposed to acquire a 51% stake in P3 International STN BHT for 1 million ringgit, marking its entry into the Taiwan market through a related party transaction. Perak Corporation BHT said its 49% owned associate, Sua Concept Pro STN BHT, has defaulted on 18.4 million ringgit in financing repayments to Malaysia Debt Ventures BHT, prompting the lender to recall the facility. Vinvest Capital Holdings BHT is facing possible suspension and delisting from the ACE market after failing to appoint a sponsor within the deadline stipulated under the listing requirements. That's a wrap for Midday Roundup with me, Dini, on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs.